never, and I mean never, waive your right to the inspection. If you think you're not capable of buying a home in 2026, or worse, you don't think you'll ever be capable of buying a home, then this is the video for you. I'm here to tell you that you're way closer to the goal of homeownership than you think you are, or that you may be giving yourself credit for. I'm here to show you that you don't have to be stuck renting forever. This video is part 2 in a series. In part 1, I told you about all the reasons why you should buy instead of rent. And in this video, I'm going to tell you exactly how you're going to do that. So if you missed part 1, don't forget to go back and watch that video. And if you've already seen part 1, stay tuned. Hi, if you're new here, my name is Hannah. I'm a realtor in Wisconsin, and depending on when you're watching this video, Illinois as well. And I help people buy, sell, relocate, and even find commercial spaces for their businesses. So welcome to my channel. But anyways, buying a home in 2026 is absolutely doable. You just need to have the preparation and strategy to actually do it. And my goal in this video is to walk you through the exact steps of how to make this happen, so you can buy confidently, avoid costly mistakes, and achieve your dreams of becoming a homeowner. So let's get right into this step-by-step process. Step 1, figuring out what you can actually afford. And I want you to forget everything you think you may know about affordability, because there's a good chance there's a lot of myths that you've been told that are keeping you stuck renting forever. I find that a lot of people are convinced before they even talk to a lender that they'll never be approved for a loan. And I'm here to tell you that that's just not true. Let me fill you in on a little secret here, because the reality is most of the time, lenders will actually approve you for more than you can afford, not less, which means you have to figure out what you can actually comfortably pay each month. So get that limiting belief that you'll never be approved for a loan out of your head, because the likelihood that you'll be approved for more than you can actually afford is quite high. But this means you'll have to be honest with yourself about what's real for you and not just what the lender is willing to give you, because the last thing you want to do is borrow more than you can actually pay back comfortably. In other words, it's the bank's job to tell you what's mathematically possible for you. It's your job to figure out what's actually sustainable for your life. So instead of starting with the large price tag of hundreds of thousands of dollars that you'll see homes priced at, I want you to start backwards, and I want you to ask yourself, what's the monthly payment that you can comfortably afford? And I want you to look and take inventory of your actual life by looking at what's your car payment, what's your grocery bill, do you have any pets that you're responsible for, do you have student loans, what are you already paying in rent, is your rent payment comfortable? Then use all of these data points to answer the question of what monthly payment is comfortable for you. Once you have your monthly payment figured out, then we can reverse engineer that into what would that actually be in terms of a large price tag. Because I find a lot of times that big price tag can be extremely intimidating and not actually give you a real picture of what the month-to-month payment would actually be. So let's start backwards and work backwards. Because let me tell you, it might surprise you what you can afford in terms of that larger price tag when you figure out what your monthly payments would be for it. Because there's a likelihood that the monthly payments you're comfortable making will actually get you a much higher price tag in terms of a final price than you may be anticipating. So when it comes to affordability, I want you to stop buying into fears that you'll never be able to afford a house. Now let's talk about some misconceptions. I find that a lot of people think that having student loans automatically makes it impossible to get a home loan, but lenders aren't looking at your total balance when it comes to student loans. They're looking at what your monthly payments are, and they're weighing your monthly payment towards your student loan or any other outstanding debts like a car or anything else. They're weighing your monthly debt payments versus your monthly income. So they're looking at the monthly ratio of your debt versus what you're actually bringing in. So again, don't let your student loans scare you into thinking that you won't qualify for a loan, because chances are you actually will. Another common misconception about affordability that I see out there is a lot of people are convinced that they'll never have enough saved for the down payment, because 20% for a down payment sounds like an astronomical amount of money, and it is. But the truth is, more often than not, you're probably not actually going to need the 20% down. Most first-time homebuyers pay as little as 3 to 5% down. And I believe the FHA, which I'm going to make a whole separate video deep diving into all of the loans available, like FHA loans, like conventional loans, down payment assistant loans, all of those things. Again, that'll all be in a separate video. But I'm pretty sure the FHA just came out with a 0% down loan. And if you're wondering what the FHA is, that is the Federal Housing Administration. But the point is, the myth that you have to put 20% down for a down payment is just not true. So don't let this be a deterrent for you. And get clear on what you actually need to have saved. Because when you buy into this idea that you need to have a bank account full of money or an amount that you'll never be able to have saved, I want you to put that out of your head and just simply get clarity. How much do you actually need? Because knowing the real number of what you actually need is going to put your dreams of homeownership at a much more attainable position than just questioning and assuming you'll need a whole bunch of money that you may or may not ever have. And here's another thing I see a lot, and which is a giant problem these days, but a lot of people have limited monthly income. And the first thing I want to say to this is it is not your fault if your employer is not paying you what you're worth and not paying you a livable income. So please, please do not feel ashamed of that. Again, it is not your fault. It's your employer's fault. You're not alone. Again, this is a major issue right now that wages are not matching the cost of living, and it's a problem that a lot of people are facing. Second thing I want to say to this is if you are a limited income earner, I want you to understand that that does not mean home ownership is off the table forever. It just means you're going to have to take a little bit extra steps planning and being strategic about how you get there. And maybe it means that you aren't making enough income to buy a house, but there are other options like buying a condo. And I see a lot of misconceptions about what a condo actually is. I'll do a whole different video about the difference between a condo and an apartment, but condos are often a very reasonable option for people that maybe can't afford to buy an actual house, but still are capable of getting out of the cycle of renting. And this is where working with a professional like myself is especially beneficial because I can work through all of your options with you. I do offer free consultations so that we can go over all of the available options for you and figure out a strategic plan that will get you into a home and out of renting. So all my information will be down in the description below. Go ahead and schedule an appointment through the calendar link. I would love to have a conversation with you about what your options actually are. And if you are feeling limited by the amount of monthly income that you earn, I want you to know that there are other options. Like I mentioned, you could maybe buy a condo instead of a house, or you could potentially team up with a partner or a roommate, which there are major, major caveats to this option. It's not for everyone, but it is an option. You could start a side hustle or even look for a new job that's going to actually value you, which I know is easier said than done. The job market right now is a nightmare, but it never hurts to keep an eye out for what could be better than your current situation. And you know what? Maybe even push for a promotion at your current job. The answer is always no if you don't ask the question. But regardless, what matters most is your personal timeline, not anybody else's timeline, yours. Because here's the thing that people forget. You can always start planning before you're ready to take those steps. And when it comes time to take those steps, you're already way ahead because you took the time now to plan and to figure it all out so that when you're ready to go, all you have to do is execute the plan that you've made for yourself. So yes, all out to say, step one is all about getting clear on what you can afford. And then once you have a solid idea of your affordability, then we start talking to lenders. And here's a really important thing I want you to understand when it comes to talking to lenders. You're not at the mercy of them. They're not the ones evaluating you. You're the one interviewing them. You are the one making them compete for your business. And what I mean by that is I want you to reach out to a minimum of 3 lenders. So you're going to go and you're going to talk and have at least 3 conversations. You're going to ask them what their interest rates are, what closing costs would be associated with them, what the origination fee would be, all of the things that are important to know from your lender. And then you're going to have that conversation with 3 of them. And you're going to get quotes from all 3 of your lenders, at least 3. And don't forget to ask them about grants, down payment assistance, any special perk that they might offer, ask them about it. So you're going to take the quotes that you collected from all of these lenders, you're going to leverage them against each other. And then, so you're going to take all of these quotes that you got from your lenders, you're going to compare and contrast them. And then you're going to use them as leverage and go back to the lenders you spoke to and have a conversation with them. So you simply go back to each lender and say, hey, so this is what a different lender is willing to do for me. How are you going to offer me something better? Because they're competing for your business, not the other way around. They want you to lend with them because they make money off of the interest. So if you don't lend with them, there's no interest for them to collect. Use their competition with each other to your advantage and get the best loan possible. Once you've had all these conversations with your lender, next comes step 2. And step 2 is finding the right agent for you. So once you've figured out what you can afford and once you've had these conversations with different lenders, next comes finding the best real estate agent to help you on this journey. And hello, that's me, Hannah. I would love to be your representation and help you on this journey because let's talk about why it's important to have a professional in your corner helping you every step of the way. My job as your agent would be to take all of the guesswork out of it, provide you with the best up-to-date knowledge and resources so that you save time, money, energy, all of that, and you can focus on clearly making the best decision when it comes to such a big life choice. It's my job to make the process as smooth as possible and be knowledgeable so that you have the tools available to you to save money and make the best decisions. So if you live in Wisconsin or soon to be Illinois, I would love to be the person to help you achieve your home ownership dreams. But if you live anywhere else in the country, still reach out. I can absolutely connect you with someone in your area that will help you through this whole process. Either way, you're not going to have to do this alone, and you shouldn't do this alone. That's what real estate professionals are here for. We're here to help you. So step 2 is about finding the right person to help you every step of the way. And once you've got the right agent, you can move on to step 3. All right, step 3 is going to be getting pre-approved with your lender. Now, pre-approved and pre-qualified are not the same thing. Pre-qualified is essentially what you were doing in step 1, which is simply asking the question, having the conversation, and getting a rough idea of what the lender would give you. But getting pre-approved is what happens when you've decided on a lender and it's time for the lender to actually verify everything that you talked about while you were shopping for your lenders. So they're going to pull a bunch of financial documents, and it's your job to have all of these documents in order and easily accessible to make this process as smooth as possible. I know once paperwork and documents and all of that starts getting mentioned, half of the room just mentally checks out. But listen, this step is not scary. It's just being organized, getting all of your documents in order, and having them easily accessible and ready available will speed up the entire process and make everything down the road a whole lot smoother. And it's going to lower your chances of things going wrong later when it comes time to be truly approved. So all of that to say, the documents you're going to want to have in order are your last 30 days of pay stubs, your W-2s or tax returns. If you're self-employed, I'm going to talk about that in a second. Usually you'll want 2 years of your tax returns, and you're going to want 2 to 3 months of bank statement, as well as your ID, a list of debts or loans, and any additional proof of income. And that's it. Nothing wild, no scavenger hunt, just a few financial documents and a ID, and that's all you'll need. And I mentioned if you're self-employed, there's going to be a few different things that you'll need to know. But for you, you'll need, again, a couple of years of your tax returns, proof of consistent deposits. So they want to make sure that you're actually making money with this business, and your tax returns. Now, the biggest thing with self-employment is making sure that your tax write-offs don't make it look like you're not bringing in any income, which is totally normal. A lot of people have a lot of tax write-offs when it comes to running their business. It's just about showing the stability and proof that you actually have the capital to make the purchase. And if you do have tons of write-offs on your tax returns, there are a couple of other options available to you. And actually, a lot of times there's more options available to you than there would be for a non-self-employed person. So if you have an LLC, there are a couple of options that don't require the same documentation that a conventional loan does. And there's tons of programs designed specifically for people that have an LLC or any other incorporated business. And those options would be bank statement loans, profit and loss only loans, DSCR loans, asset-based loans, and many other financing options. We can go over these specifically if you are a self-employed person. Book a call with me and we can walk through all of these together. But all of these programs are looking at your cash flow versus your tax documents. So again, if you do have a bunch of write-offs on your tax returns, perfectly normal. Don't freak out. There are still ways for you to qualify through one of these other routes. But a common fear I hear from people is anxiety around your credit score. And I'm here to tell you, you don't have to have a perfect credit score. Your credit score doesn't need to be in the 800s. It doesn't even need to be in the 700s. And sometimes it can be as low as even in the 500s. And you'll still be approved for a loan. Granted, the higher your credit score, the better loan terms that you will qualify for. But if your credit is not optimal, that doesn't disqualify you. Again, simply ask the question. So a low credit score won't automatically disqualify you for a loan. It just might mean that a loan for you looks different from someone with a higher credit score. Do not let this fear deter you from simply asking the questions. Now, before we move on from this step, I want to talk about some common mistakes that people often do make this process more difficult than it needs to be. And I want to make sure you don't do any of these things before or during the pre-approval process. You don't want to open any new credit cards. You don't want to finance a new car. Don't co-sign anything. And don't deposit a bunch of random cash. But if you do deposit a bunch of random cash, just make sure it sits in your bank account for about 2 to 3 months, because oftentimes lenders are only looking at your bank statements from the last 2 to 3 months. So as long as you've deposited that cash and given it enough time to wait, you'll be fine. But anyways, lenders really hate mystery money. So just make sure if you're going to deposit any large sums of money, give it enough time for your bank to build the paper trail, and your lender more than likely won't bat an eye at it. So if you're not sure whether or not something during this process is going to matter, just ask me and I'll let you know whether it's something you should or shouldn't do. Once your documents and everything are in order, your lender's job becomes so much easier. And that means the process also becomes quicker. And listen, getting pre-approved before you start shopping for a house is one of the best things you can do for yourself, because when it comes time to start making offers and houses are selling quickly, being pre-approved is going to make your offer a lot stronger. And it also means that, and with a stronger offer, sellers are often way more motivated to sell to you versus a buyer that doesn't have pre-approval, because it just proves that you're good for the money that you're telling the seller that you're going to be good for. It's good for credibility purposes. So once all of your documents in order and you get pre-approved, then comes for the next and most fun step 4, shopping for your home. And let's make sure we're shopping strategically. And I want to emphasize that word, strategic, because this is the part where people often get caught up in all of the emotions associated with such a big life choice. And while it can be an emotional experience, I want to make sure we don't lose focus and let emotions cause us to start falling in love with properties that may fall outside of the price point that you decided upon in step 1. So let's talk about shopping for a home strategically without losing yourself in the process. First, we're going to get clear on what you actually need and want. Not all of your wants are created equal, so we need to create a system to prioritize all of the things that you think you might want in a home. So how we're going to do this is we're going to create 3 different lists and categorize all the things that we want into these lists. So those lists will be 1, non-negotiable, 2, nice to haves, and 3, absolutely nots, non-negotiables. So these are the things you absolutely cannot live without and you can't renovate later on. So I'm going to use myself here as an example. A non-negotiable for me would be I absolutely need yard space. I have a big fluffy dog. You can see a painting of him in the background. He is a Husky Malamute mix that absolutely needs a yard to run free. So yard space would go into the category of non-negotiable. It's not something that I can renovate later on. A house I buy sits on the land that it sits on, no more, no less. So when I'm looking for a home, I got to make sure that the homes I'm looking at have a yard. An example of a nice to have for me would be no carpets. Ideally, any home that I find wouldn't have any carpets that I would need to remove and replace later on. But again, I have a big floofy dog and carpets for me are just a no. But they are something that I can renovate later on if it's a problem. I'm not going to disqualify a house just because it has carpets in it. Then we get to our absolutely nots or our deal breakers. And that's, again, something about the house that you just can't live with and can't change. So an example of that might be the house is great, but it's way too far from your workplace for you to want to make that commute every day. So categorizing your list of wants in this way helps you get super clear on what would make or break a house for you. Now, once you've created this list, I'm going to give you an unconventional piece of advice, but I want you to give yourself one day to be so completely unrealistic and live in this fantasy. Look at all the homes you may never be able to afford. Look at luxury. Look at things that are so wildly outside of what's realistic for your life. And you might be asking me, why do this? And that's because doing this is going to give yourself an outlet for all of the unrealistic ideas to live. And so all of those unrealistic things aren't clouding your judgment when it comes to looking for your real home. And simply, it's fun to dream. And giving yourself permission to dream will help the emotional process of reality a lot easier to deal with. Again, creating a container for the fantasy to live in is going to help the real process be a lot more clear. Also, a lot of times doing this will help clarify your wants list, because a lot of things that might be in your non-negotiable category might actually turn out to be a nice to have. So once you've gotten the fantasy out of your system, we can get practical. We'll focus on houses and neighborhoods that fit your lifestyle best, while factoring in things like your commute to work, proximity to different restaurants, parks, nightlife. But we'll factor in noise tolerance, walkability, and how well it fits your budget. Because I'm going to be real with you. Yes, your budget might stretch further in different neighborhoods than others, and we'll take that into account as well. So once we've shopped around and gotten absolutely clear on the homes you want and are interested in, now comes for the next step, which is making an offer. So this is where strategy matters even more. Let's get into how to make super strong offers that actually get accepted. This is the moment when people get excited and then terrified and then excited and ride a whole roller coaster of emotion. But let's walk through what's happening So let me walk you through what's happening during this step. And the first thing I want to tell you is arguably the most important. Do not get emotionally attached to a house before making an offer. And arguably, don't even get emotionally attached to a house until an offer has been accepted, because emotionally attaching yourself to a house before those things happen is essentially a recipe for getting your feelings hurt and becoming disappointed. Because in today's markets, houses sell fast and there's a lot of competition. So I want you to be realistic and not get your emotions involved until absolutely necessary. Because it's not out of the realm of possibility that you'll make offers on several houses and not get accepted for either one of them. But I want you to understand and get into this mindset that if your offer wasn't accepted and the house goes to a different buyer, I want you to simply tell yourself that that house just wasn't meant for you then. Essentially, I want you to tell yourself that there is something better out there and that there's ultimately a reason that that house was not meant for you. I mean, for all we know, there could have been something fundamentally wrong with that house, and you having your offer rejected is actually saving you in the long run. All that to say is stay grounded, keep your emotions out of it, but it's a process that you will get through. Stay detached from the outcome and understand that rejection is just redirection. Now that we have all of that out of the way, now let me get into what we can do to make your offer as strong as possible and set you apart from other buyers so that we limit the amount of times we have to compete for the house that you want. As I mentioned in part 4, being pre-approved is a huge way to make your offer exponentially stronger. It shows the seller that you are serious, and it shows them that you're also reliable as well. Sellers want certainty, and they want to know that the buyer that they're selling their house to isn't going to end up backing out during the closing period because their financing doesn't actually get approved. So being pre-approved shows a seller that you're less risky than buyers that aren't pre-approved. Another way to strengthen your offer is to offer more earnest money. Now, you may have never heard that term before, but essentially earnest money is all of the money that you yourself are going to pay. And this differs from your down payment or anything like that because it's essentially money that is readily available on the spot to show your buyer that you are good for the money that you say you're good for. What happens with this is you would give me your earnest money. I would have my brokerage put it into an escrow account. And then depending on what happens with the sale, either that earnest money goes to your seller if they approve your offer, or if they don't approve your offer, you get all of that money back. So offering a higher amount of earnest money is a good way to strengthen your offer. And then another thing that we can do to make your offer as strong as possible is offering the seller the right price. Now, I know getting into the price tag can often be very anxiety-inducing. I see a lot of people often get scared of offending the seller. And I want you to know that you're not doing this alone. That's another benefit of having a real estate professional who's on your side and knows what they're doing, because I run the comps, I analyze the market, I look at how long the seller has had their property on the market, because the amount of days that the property's been on the market is another thing that I take into account when it comes to negotiating a price. Essentially, I look at all the things that Zillow can't tell you, and I use these as data points to give you the best advice on what a good offer on a given property will be. That being said, it's not just the price point itself that we can negotiate, but there's a ton of other things that we can negotiate with the seller as well. These things are called seller credits, which can come in many forms. So sometimes it might be beneficial to offer them their asking price. However, asking for different seller credits for things like assistance in closing costs and other things like that. Point is, there's a lot of ways we can negotiate with the seller while still maintaining a strong offer. All right, once we've submitted an offer, then we wait. And while we wait, we prepare for the next step. Because once your offer is accepted, congratulations, you're ready for step 6. All right. Okay, step 6, and that is doing our due diligence. This is an incredibly important step of the process because this is where we ask the question, wait, does the house have any problems that we should be aware of? And spoiler alert, every house has problems that you should be aware of. The question is more about, are they something that we can go back to the seller and negotiate on? Is it better to back out of the property entirely? So let's talk about what doing our due diligence entails. You're going to want an inspector to come out and look at the roof, the foundation, everything electrical, all of the plumbing, the HVAC, windows, appliances, all of the things you wouldn't even think to look at. Every house has its secrets, and you're going to want an inspector to uncover all of those secrets for you. Additional things I would recommend having inspected is a radon test. Radon is a natural gas that occurs in the underground of the earth, and it's radioactive, and a lot of basements have radon exposure. So you're going to want to know how to deal with it and want to know that about the property you just bought. I would also recommend having your sewer lines inspected, especially if you live in an older neighborhood. And if you've bought property outside of the city, make sure to have your well and septic systems inspected as well. And these aren't just extra hoops for you to jump through. These are tests that help people save thousands in unexpected costs. because you figured out everything ahead of time. The question is it safe, livable? And if there are things wrong with it, how can we negotiate with the seller to address those things? Once we get the inspection report back, we decide what matters. And then we go back to the seller and say, here's what the inspectors found. Sometimes we ask the seller for seller credits. There are tons of different seller credits to request. And sometimes the issues that are found aren't big enough issues to ask the seller for anything. But going back to the seller for negotiations depends on the severity of the problem, the age of the home, market conditions, and what the seller can realistically agree to. The purpose of doing due diligence is to confirm that the house is in good condition and there's nothing that you missed while you still have power to negotiate. So please, please, please take my advice. Even if you live in a competitive market, never, and I mean never, waive your right to the inspection. Just because you think it might strengthen your offer, it's not worth it. Never going to be worth it. Always, always, always inspect a property before you buy it. Even if you think a home is new construction, get it inspected. Never waive your right to the inspection. And once the inspection and negotiations are finished, you'll feel a lot more confident about the home that you're buying. And once we've done our due diligence, we move on to step 7, and that's underwriting. You may be asking me, what is underwriting? And this is the part of the process where things for you slow down a little bit. It's the part of the process where your lender takes all of those documents that you provided them and actually verifies everything that you've said. They're basically just triple checking everything that you've provided them. They want to make sure that your income is steady, your credit hasn't changed, your debts haven't increased, your bank statements match what you provided them, and you're still the financially responsible person that you claim to be back when the pre-approval process. Basically, it's your lender doing their due diligence and making sure you are who you say you are, and your financial situation is what you've said it is before they give you hundreds of thousands of dollars of their money. There really isn't anything for you to do at this phase other than quickly respond to your lender if they come asking you for anything. Also, as I said in step 1 during the pre-approval, do not do anything that might impact this process. In other words, don't buy a car, don't open a new credit card, don't finance any furniture, don't take out a personal loan, don't switch jobs either, and don't deposit any mystery money. I know it's tempting to think, oh, it's almost time for closing. Let's make some random big purchase. But please trust me, do not make any big purchases till after this process is through. And I know, and a lot of people are afraid that something at this step might fall through. But here's the deal. If we did steps 1 through 6 correctly, there shouldn't be any surprises. And it really should just be a process of doing the paperwork. That being said, the only time things tend to go wrong is if there's a big sudden financial change. And even if that does happen, there are ways that we can work around that and get you to the finish line of closing. So your job during underwriting is pretty simple. Respond to your lender quickly if they come asking you for anything, provide any documentation that they may request, and avoid having any major changes. And that's it. Underwriting takes usually about 2 to 4 weeks for your lender to complete. And then once underwriting is completed, you're basically at the finishing line. Then what happens is the lender will issue you a clear to close document, and then we move on to the closing process. So let's get into it. Step 8, and that's closing. And this is the moment you've been working towards, getting through all the paperwork, the showings, the underwriting. You've survived the emotional roller coaster. You've gotten through everything. And now you're a homeowner. So let me walk you through what happens on closing day. And it's pretty straightforward, but you're going to want to do a final walkthrough and just make sure that the home is in the condition that you and the seller have agreed upon and that nothing unexpected has happened since the last time you saw it. After the final walkthrough, you're going to sign a huge pile of documents. Honestly, your hand might be cramping by the end of all the signings. After signing all the documents, you're going to have the funds transferred. Your lender is going to send a loan amount. You're going to send your closing costs and down payment, and then the title transfers to your name. The title transfer is the moment that the house is officially yours. Now, once you've closed, there are a few things that you're going to want to do after closing that no one tends to warn you about, but I'm going to tell you right now. Number 1, change the locks. Please change the locks. You will thank me later. You don't know who all out there in the world has a key to your new house, and don't take that risk. Just change the locks. It's not going to cost that much. Then you're going to want to update all the utilities and make sure they're all in your name. You're also going to want to check the warranties on all of the appliances and the roof, the foundation, all of the mechanical systems. Check your warranties. And then I suggest doing another walkthrough of the property because this is a moment to let it all sink in. You are now a homeowner. And then celebrate because you just did a major, major thing. And you deserve to feel all the joy and positive feelings that brings. So do not forget to celebrate yourself. And what you've just accomplished because it's huge. And that's it. Those are the 8 steps that it takes to buy a home. And if you've watched this whole video, it tells me that you're serious about taking the next steps that it's going to take to officially become a homeowner and break the cycle of renting. So even if you feel overwhelmed, even if you don't have a big down payment, even if your credit isn't perfect or you have student loans, or any other reason you tell yourself of why you can't afford to become a homeowner, I want you to know that there is a path for you, and I'm the person to help you figure out that path. So don't hesitate to reach out to me. All of my information is going to be in the description box below, and I can't wait to help you on this journey towards homeownership. And again, if you're anywhere else in the country outside Wisconsin or Illinois, still reach out to me and I'll get you connected to someone that can help you wherever you are, because you don't have to figure this out alone, and you shouldn't figure this out alone. Let us help you. Don't forget to like, subscribe, and turn your notifications on so you stay up to date on all things real estate. Thank you for watching.